Like the idea of getting more money for doing nothing? Would you like to create nearly bulletproof passive income that grows all by itself? Want to know about stocks that keep raising their dividends? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. There are a lot of forms of passive income out there. I've dabbled in quite a few of them myself, but my favorite? Dividend income, hands down. But not just dividend income, growing dividend income. As great as dividends are, growing dividends are so much better and so much more important. Because the costs of life are rising, you have to make sure your passive income is also rising. Investing in high quality dividend growth stocks sets you up to collect safe, growing, totally passive dividend income like clockwork. That's because these stocks represent equity in some of the world's very best businesses. And what do amazing businesses tend to do? They rack up ever more profit year in and year out, which funds those ever larger dividends to shareholders. Today, I want to tell you about 3 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase I want to tell you about came courtesy of Federal Realty Investment Trust, stock ticker FRT. Federal Realty just increased their dividend by 0.9%. I know 0.9% isn't huge, but it is more income. More income for doing absolutely nothing other than simply holding stock. So it's a nice reward for no work. And it's certainly better than no dividend raise, or worse yet, a dividend cut. No worries about a dividend cut here though, because Federal Realty has one of the most reliable dividends you could possibly find. This real estate investment trust has now increased its dividend for 54 consecutive years. That makes them a Dividend Aristocrat more than twice over. They're a Dividend King, which is special status reserved for stocks with 50 or more consecutive years of dividend increases. While this sub 1% dividend raise trails the stock's 10-year dividend growth rate of 4.7%, we're still in the midst of a recovery. Meantime, the stock does yield an appealing 3.6%. And based on the midpoint of this fiscal year's funds from operations per share guidance, the payout ratio is 83.9%. The stock is up 45% year to date, but the valuation hasn't become stretched. I highlighted this stock as an undervalued opportunity last year when it was under $75 per share. It's now coming up on $120 per share. Even after the big run though, I don't see the stock as all that expensive. The price to cash flow ratio of 20.9 isn't extreme, even though cash flow is still somewhat depressed from the pandemic shock. And the stock's yield is actually 10 basis points higher than its own 5-year average. If you're looking for a Dividend King REIT for your portfolio, this one should be on your radar. The second dividend increase you should know about came from Illinois Toolworks Inc., stock ticker ITW. Illinois Toolworks just increased their dividend by 7%. 7% more money for sitting on your hands. How awesome does it get? I still remember working my butt off to get a 5% pay raise back when I still had a day job. Getting a 7% pay raise and totally passive income for just holding stock, you really have to love it. This is the 47th consecutive year of dividend increases for the manufacturer. Another dividend increase from another Dividend Aristocrat. What's new? This stuff truly is like clockwork. With a 2.2% yield and a 10-year dividend growth rate of 13.1%, this stock sports some really appealing numbers despite the fact that it kind of flies under the radar. And this is a very safe dividend. Based on the midpoint of this year's earnings per share guidance, we're talking about a payout ratio of approximately 55%. This stock isn't cheap, but quality is worth paying up for. As I've said so many times before, you don't get a diamond for the price of a cubic zirconia. If you want low quality companies that do poorly over the long run, you'll find the cheap deals out there. But if you want a high quality Dividend Aristocrat like this one, you gotta pay up. As with everything in life, you get what you pay for. With its price to earnings ratio of 27, it's commanding a premium valuation for the premium business it is. But if there is a dip, that could be just the window of opportunity you need to jump in. Last but not least, let's talk about the dividend increase that came in from Fidelity National Financial Inc., stock ticker FNF. Fidelity National just increased their dividend by 11.1%. How many double-digit pay raises have you received in your life at your day job? Probably not too many. Now, how many double-digit pay raises do dividend growth investors tend to get? Plenty. That, in a nutshell, sums up why I quit my job in my early 30s in favor of living off of growing dividend income from high-quality dividend growth stocks. This is the 10th consecutive year of dividend increases for the title insurance company. And what's super interesting about this name is the combination of yield and growth. Check it out. This 11.1% dividend increase is very close to their 10-year dividend growth rate of 11.7%. And that consistent double-digit dividend growth rate comes on top of the stock's current yield of 3.4%. It's not often you'll find a yield this high along with a dividend growth rate this high. And their recently released quarter 2 report showed that earnings per share for the quarter was $1.92. That covers the quarterly dividend of 40 cents or $1.60 per year all by itself. So this is an extremely safe dividend, which is why it just got boosted. Despite the 23% year-to-date run-up, the stock continues to look cheap. I highlighted this stock in a video back in April where I revealed that I had initiated a position in the company at less than $41 per share and shared that information with my patrons in real time over at Patreon. The stock is now over $47 a share, so it's up quite a bit since I started my position. Still, with its single-digit price-to-earnings ratio, big-time dividend raise, and blockbuster profit growth, this stock looks undervalued to me. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.